All right, good morning. Let's go over today's trade plan. So in the overnight session, we saw that the S&P balanced above yesterday's breakout of 66.5, and basically the overnight range ended up being, the balance above the breakout and below the all-time high. We actually got multiple tests of the all-time high in the overnight session. So at this point, following a trend up day, buyers are still in control, and we're expecting buyers to be active on any pullbacks into support. Holding above 70 to 71 would tell us that buyers are in firm control, and they have a shot at making yet another new high. This time it might be a little bit more marginal than even yesterday. Yesterday you pushed the all-time high up by roughly 8 points, and today could be a little bit similar, or you might not get really an 8-point push up. It might be a little bit less than that, and we have the initial resistance at 81 to 83 on the upside, but keep in mind that above the all-time high there is no hard resistance. This is all based on the expected range on the day, and just the recent volatility. So right off the open, the 70 to 71 area is going to be important. Holding above it just tells us that buyers are in firm control and we can get an upside move. If we fail to take out the all-time high, or even if we do take out the all-time high, the high probability scenario is for the market to consolidate the recent gains, and that means more of a balanced type session, more of a two-sided session where buyers are active at support, and there's some profit taking on any range extensions above the all-time high. So the 70 to 71, is aggressive trade location. Anything above that is very aggressive because in order for that trade to work, the market has to pretty much print a new high, and that is yet to be seen. The more conservative trade location is pullbacks into support. So something like 64.5 to 66.5, or the 63.5 HVN, or the 59 to 61. Now that would be quite an extended pullback, but we have to keep in mind that even though the RTH session trended from around 62 up to 74, the 24-hour session was quite a wide range. So pullback to 59 to 61 would not necessarily put sellers in control or anything. It would still be a pretty normal pullback within an uptrend, and we can still get continuation or move back up towards the 66 and then higher up towards 70. So really off the open, the conservative setups are pullbacks deeper into support, and in order to take any long setups above 70 to 71, that's a decision that needs to be made in real time. Just because the location is very aggressive, it's not like an automatic buy or anything. Right now the buy side is holding up well, but if we're going to get a consolidated session, we can quite easily get a pullback to 68.75, the prior VPOC, test that, maybe the overnight low or pre-market support. Those would not be out of the question. And because we're expecting balance and a range-bound session, first test of support offers a very high odds of rotation. So those are the conservative trades. Now, if you're taking the trade at 68.75 or 64.5 to 66.5, that is still a trade that you want to see work out relatively quickly. You want to see it kind of break the overnight balance, test support, and then shoot right back up relatively quickly. It's not a trade where you just put it on, you let it go. We have to realize that we're trading at pretty elevated prices, and for that reason, a pullback to 59 to 61 wouldn't really be a big deal. It wouldn't really invalidate anything. The uptrend would still remain very much intact. So really, it's a matter of how aggressive or conservative you want to be. Above 70, 71 is the aggressive crowd, right? The aggressive buyers who really want to be involved in this market, or perhaps we're stuck short and need to cover. Will be willing to buy above 70 to 71, and those trades can still work out, but it just requires a real-time read. Kind of like yesterday, where once the market opened, we saw that 63.5 was a level that held, and internals were extremely positive. the Russell put in a massive breakout to the upside. And once you see all that and you have all that information, then it becomes a lot easier to take the aggressive trade or the aggressive trade location. But pre-planning that type of trade is more difficult because we don't know how the market's going to shape up once it really opens up. On the econ calendar, we have ISM out at 9 a.m. Central, so that's really the only kind of main econ release this morning. But we have more important econ releases tomorrow and Friday. So for that reason, it might be kind of a muted reaction, might not really get a lot of attention, especially because we had a trend update yesterday. So overall, expecting balance, expecting two-sided market. It's just a matter of where the S&P balances. Whether it balances above 70, 71, extends the range, and then you start getting two-sided movement, or if we get a deeper pullback and then you start balancing, within the recent range, within yesterday's range. So those are really the two main things that we'll just have to figure out once the market opens up. But regardless of where we balance, the idea is still that it'll be more of a two-sided session. The long setups are still going to be higher odds. We are in a uptrend right now. Buyers are in control. So if you want to just focus on one side, similar to yesterday, it would be the long side. So those are our main ideas. Let's see how well we hold up, in the first 30 minutes and post econ, and we'll take it from there.